Well, good day, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for Monday, the 27th of November, 2023, and the time 6 p.m. Central Time. All right, my friends, interesting times. Adobe came out after the market and said that the sales for Black Friday were much stronger than they first reported, up over 12 to $12.4 billion. I think they came out at first 7.5%, $7.5 billion up to $9 billion. So the numbers keep climbing, and that is giving a little bit of a bid into a lot of the stocks. So you've got to pay attention. Don't forget, you're very overbought in the stock market. Tonight in my full research, I show one of the studies that have come out where they go back for about 40 years or so, a little longer, I think, in some of the studies. And they show what the day after in the first week going into December looks like. In other words, this week, the week after Thanksgiving, looks like in the S&P typically. And I can tell you most of the time you get a small gain. We'll see if that works out this time. I won't show with you how much, the years that it did it. That is in my full research, which brings me to the point that we are having our cyber sale. And if you purchase any of my full research products, that could be my full research for futures, which includes the morning subscriber video, my twice daily written updates and special updates as I issue them intraday or other times. My morning video for just futures, my morning video for just the ETFs, or the combo of those two, any of those. If you're an existing subscriber and you move up, I will honor this. But it's not for those that are a morning subscriber video moving over to the morning ETF video because they're basically the same price. That I won't honor for this deal. But where I will go with it is you take, let's assume you have one of those and you either move to full research and or you go to the combo to get both. I would do that. Combo traders, if you add the full research, we will do it. So we have a lot of subscribers, and they ask for different ways that they can do this. And for those of you that haven't joined, this is your opportunity to do so, okay? Take advantage of it. I think you'll find it worthwhile. It's a great gift, by the way. So if you're doing that, you don't need the course, you took it already, or you don't want it, you can give it as a gift. We will work with you on that as well. So you're entitled to that. So when I'm looking at the markets, one of the big things is what's going to happen in energy. OPEC is obviously in the midst of discussion. I don't know if it's disputes. I don't know if there's arguments. I think the word discussion is right with other OPEC members to see what they can accomplish. The meeting has come and gone. The original scheduled date, that was last week. Now the 30th is the next date that they've got pegged. Word in the news is that there's still battles going on, if you will, discussions between the Saudis and African countries, but I don't know that there isn't more behind this. I feel that the market will not be happy if it's status quo. If everything were to stay just as it is, I think the market would say there's a crack in the armor here, and you might get a negative reaction. Any further cuts would show that the Saudis still have control of OPEC and got the sway going. So that's my guess as to what would happen. Would I want to gamble on it either way? Absolutely not. You can get too big of a move one way or the other. A market that's suddenly coming alive is the gold market. It got up today into the 2023 level, and it ran into a brick wall. The Bollinger Band was up there, and it should have backed off, and it did. That's what I teach in my course, and knock on wood, that worked. But it is a friendly market. The dollar's been under pressure. The big question is it going to get back and close under the 103 level, which will add more downside? You're sort of waffling right here in the bonds and the notes. We're going to get some CPI numbers this week. You want to pay attention. We get the Fed Beige Book on Wednesday. We get Case-Shiller home prices tomorrow. We have a slew of small economic data tomorrow, but nothing that I would call phenomenal. I think we get consumer confidence as well. Now, when we look at the E-mini S&P, and we're looking at a weekly chart, that's why there's no month here, the ES23, there's no month. You can see the market's over the 18-week average, and that's bullish. Typically, you have an up move the first week after Thanksgiving. Is it every single year? It is not. It's a high percentage, but nothing in the 80 percentile. It's in the 70s. Okay. When I take a look at the action here, you can see that the market is just hanging in there. Do you remember me telling you a shoulder, and a head? And I said if you take from roughly the 4,100 level to the 44, you get 300 points. If you add that to the top, maybe you have 4,700 you could get to. Don't look too bad since I said that, because you have added another 160 points. So I was right in the direction. I don't know if you can get that far. That's the big question. I'm already seeing the different firms around the country, Deutsche Bank, different Citi, and some of the others are coming out with their 2024 projections, which I always laugh at. All right, flip a coin. That's how accurate those could be. There's too many variables, but it's fun to see what they do. Deutsche Bank's outlier numbers 5,500 in the S&P. Their lower numbers 5,100. I see just about every bank has higher numbers for the year. So we will see what happens. And those are the banks that I'm seeing come out so far. When you take a look, the pattern is one of higher lows, higher highs, which is bullish. You had a bullish crossover just take place. Now, what's going on? The 18-day average in red just got over the green, the 100. So now you have a classic bullish setup on moving averages. Excuse me. The shortest term, which is the 18, is over the medium term, which is the 100, and both are over the 200. That's bullish. Normally you make new highs off of that. We'll see if that happens this week or not. When you take a look at Bollinger Bands, the resistance is 46.40. I'd be really thrilled to see that happen in the marketplace. And you have an embedded reading. And again, for those of you that have taken my enhanced Bollinger Band course, you know the power of this reading. Until and unless the red closes under 79, the market stays bullish. And now it has dragged a crossover with it, created new highs on this move virtually. When we take a look at the NASDAQ, it's trying to get a bit of a correction in it. So what led the market is the first one of the major three that have been going up. I don't count the Russell in this group because it's been dragged along. But it's starting to get a little bit of crack in its armor. Close under 79 and you might go back to wherever the 18-day average is. And from here, that'd be nearly a 250-point break. That'd be a heck of a break. The Dow is still acting very strong. And here, too, we just had a bullish crossover. The identical picture. The 18 got over the 100. Both are over the 200. You open the door up for the 35,800 level in the market. And in the Russell, you are overbought, lots of overhead resistance in the market. Trend is up, but just not going anywhere with it. We could at any point, folks, get a correction. This thing's gone so long. But as I said, the odds favor that this week will be an up week, not dramatically so. Over the period of time that I write about in my newsletter, I won't share that till you go up about a 0.5 percentage point. I'm not going to share everything. That's what you get in the full research. I give you so much of this detail. In the 10-year notes, you can see pretty stiff resistance right up here. I would say the 109.08 and a half area going to be a very stiff resistance point if you can get there. What you've got in the market has been a correction in a market with bullish bias. Why? The swing line turned down, lower highs, lower lows. You went right into that 18-day average and you found your support there, and you did the identical thing in the 5-year. So the work was accurate in the sense that it was looking for a pullback. You got it. It stopped at the 100-day average. If you can clear last week's high, then you open the door up to get into the 106.5 level, maybe a little higher than that. In the dollar index, you continue to slip away. You're down now to the 200-day average. Again, this is because the market fully believes, high percentage, that the Fed is going to cut and probably do so by June of next year. But these numbers will bounce around. You're going to get CPI reports, give you a better idea of what you've got this week. We saw terrible home sales. I'm sure if you saw that today on the any of the financial stations. But remember, those were October numbers when interest rates, well, mortgage rates, hit 8%. Now, they have slipped since then. Will that give new home sales, and that was the number out today, any type of respite off of that as prices slip a little? Maybe, but remember, the time of year is working against it. This is now in much of the United States winter time. People don't go shopping for their new home with high mortgages in the winter time like this. So you're going to get less traffic, and that's showing up. And the supply of homes, new supply homes built, you're up to 7.8 months. You were under 7 months on the last report. So it's a good time to negotiate with the builder. He's got a high carrying cost. You could probably go in there and work a buy down on rates, get a 1 year, 1.5 year down, make sure that somebody's going to pay for the refinance charge, not you. Work things out. In the eurocurrency, you have a bullish embedded reading. This market might still be headed to the 110 zone, 110, 40, 50, let's call it, is the resistance point. The support now, I don't know if the 200-day average can be called the support. It's the first real test. You got over it, you came back, you held it, you bounced away. I think the next day or so will tell us what it is. But something else is about to happen. You're going to get a bullish crossover here. The 18-day average this week should go over the 100. So that adds fuel to the fire that this market wants to continue on. And even the lowly British pound doing better. Why? Because the prime minister's up for election next year. He's pulling out all the punches. They're going to give tax breaks. They're going to do everything they can to keep him in power. So as much as he can get through Parliament, he will. As much as he can do with his own orders, he will. And the market is responding accordingly to that. When we look at Bitcoin, the market's in need of an ETF, and it's not getting it yet. You got overbought, you're getting a correction, you're sort of stuck here. I believe that the moment you hear that one has been passed, the market will be $40,000 plus in this. But you're not there, you're $37,670, and you're drifting. We believe it'll happen. We believe it's a game changer for the market, but it hasn't occurred. And it may not until, I think, legally, the SEC has until January 10th. I don't know why. I think I wrote about that a couple of months ago. In the Brent versus WTI oil, you're back to the $5 range, so the stronger market's clearly the Brent. And obviously, they've got the one with the meeting. What are they going to do? But the trend is down, not up. Lower highs, lower lows. You came down to the 200-day average, and you basically had a poke under it, but you haven't been able to stay under it very long. The market is paying great attention to that. If you break down from here, the next spot to find support, 77.5. So keep your eye on that. And if that goes down, you'll take our oil to 72.84. Now try to imagine. We have food prices breaking in all the grains. Take a look at meat prices. They are going in the toilet. Ladies, gentlemen, you're going to be able to go to the market soon and see that your steak prices are going to all be falling. They won't give you that break in the restaurants, but you will get it in your grocery stores, your butcher shops. It's coming. You can see it in the futures, what is going on, and it's a big break that is going on. It's not a little one. Heating oil, this is great with the cold weather that we're getting. We had snow in Chicago over the weekend, and today it didn't get above freezing. So all our heat is on, but we're going to be 40s by the weekend, mid-40s. So it's there, but it's not a huge draw on natural gas, which is staying in the toilet. There's just so much of it. And I kept telling you I thought this market could fall and offer you something there. So I want to remind you, take advantage of our Cyber Week sale. If you have questions, call my staff. You can click up here. You can go to YouTube and click in the video. You'll see right where it's at. And I've sent out direct mails to all. You have a great day. Give a course away or teach, learn, do something with it. It might be a great thing for you to show your kids how to trade and teach them with some of these courses. I'm Ira. You have a great day.